Welcome back. You're watching The Money Show. I'm Kavita Thapliyal, and the last bit of the show where there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Amol Joshi, founder Plan Rupee Investment Services. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So that's the place where we keep waiting for your questions. Also, if you watch our shows on YouTube, you can leave your question in the comment box, and we shall include your questions on the show. All right, so Amol, good evening and welcome to the show. Let's move on to our viewer queries, and let's take Parag's question first. He says the time horizon for his investment is 15 years and goal is early retirement. I'm looking for his age. He's 29 years old, and investment monthly that he's doing is 70,000. Current portfolio size is almost 21 lakhs, and he wants to understand the maths behind having 1 lakh per month as income from this portfolio after his retirement. And he's got Parag Parekh Flexi Cap, Mirror Asset Emerging. He's got Mirasset Large Cap, Kotak Emerging Equity, ICICI Value Discovery, SBI Small Cap, Axis Small Cap in his portfolio, and he's also doing STP for that. Now looking at these funds, and we actually don't have the age at which he wants to retire. So maybe he's 29, and let's assume that maybe he's talking about retiring at the age of 40 or 45, because that's what typically early retirement these days mean, Amol. So a goal of 1 lakh per month at the age of 40 or maybe 45. If I have to do a reverse calculation, how much should I be able to invest now? How much investment is needed now?
Absolutely, Kavita. This is the right approach. And as you mentioned, Parag wants to, current age is 29 and Parag wants to retire in next 15 years. Investment horizon is given as 15 years. So first and foremost, as you rightly mentioned, we should do the reverse calculation. Parag's existing monthly expenses are 1 lakh rupee per month. If you assume an inflation of 6% over next 15 years, these expenses themselves will rise from 1 lakh rupee per month to 2.4 lakh rupee per month. So that's the kind of requirement he will have from age 44, 45 when he wants to retire. That's the first leg of this retirement planning exercise that we are doing for him. Now, second leg is assume life expectancy of about 80 years. So from age 45 till age 80 is Parag has 35 more years for himself to sustain on his portfolio that he is going to accumulate over next 15 years. Again, by doing the reverse calculations, we understand that he should have 15 years from now a sum of rupees 3.75 crore. If that sum, because he will further have 35 years of investments also. So your entire corpus, obviously, you are not going to spend in 1 day, 1 month, 1 year or so, simply because you have to sustain yourself for 35 more years. So that corpus will also be invested. So if that invested corpus gives about 11% sort of returns and 4 to 5% inflation, then 3.75 crore rupees is the requirement that will fulfill his need for next 35 years. Last but not the least, how to get to this 3.75 crore rupees amount. His existing lump sum is 21 lakh rupees and 70,000 is the monthly SIP. If he continues with the same rate of investment of SIPs, and if he's in his portfolio is all equity, in an all equity portfolio, if he gets 12% kind of CAGR, he will accumulate close to 4.5 crore rupees. So congratulations, Parag. If you are listening to this, if you are hearing us, you are well on your way to achieve your early retirement. Coming to schemes, I can see there are 2 schemes in the emerging domain. There are 2 schemes in the small cap domain. One of the scheme in small cap is a much lesser size, 10,000 rupees in SBI small cap and 3,000 rupees in Axis small cap. I would say combine these 2 schemes into one, reduce your fresh investments. You can reduce your large cap schemes also from 2 to 1, and your fresh investments can go mainly into flexi cap schemes. So that's my recommendation to you, Parag, and once again, congratulations.
All right, Amol, let's move on, and I have Prasanjit besides question. I think Prasanjit is there with me online also. Prasanjit, hi, good evening.
Good evening, ma'am.
You have a question on mid-cap sector, a mutual fund of mid-cap. or real estate
Yes, ma'am.
also?
Yes. Ma'am,
Okay,
I
any
have an
specific reason? Sure.
ma'am, I
Yeah.
am a government employee. My salary around 42K monthly. So I want to make a plan of next 10 to 15 years for my daughter higher education and also my retirement benefit. So I am invested now around 10K regular basis as a SIP in various mutual funds. These are HDFC large and mid cap fund IDCW with SIP 2K. Next one is HDFC mid cap opportunities fund growth direct plan. There is also 2K. And Miraj Asset flexi cap fund direct plan. There is also another 2K. And another is one small cap fund growth direct plan. There is SIP 1K. And another is Navy flexi cap fund direct growth plan SIP 1K. And the last one just I am started before 1 month ago, HDFC small cap direct plan growth SIP 1K. So ma'am, my
Okay.
target is to be
So Prasanjit,
CAGR around 12% to 15%.
Prasanjit, 1 second. Prasanjit, 1 second. I will have to stop you because these details were not given to us, okay? And because we did not have these details, we couldn't forward it to our guests. It gets slightly difficult for the guest to even do your complete financial planning, because what we try to do is just give you the best possible plan or investment instrument for your financial goals. I would request you to send us your question with all these details once again. Amol, right now, whatever detail you have, whatever question you've got that Prasanjit has sent us, what can you recommend him?
Right, Kavita. So main question from Mr. Prasanjit was whether I should do direct stocks in mid-cap sector or whether I should go towards mutual fund, whether I should go towards real estate. Which of these instruments will make me a 15% CAGR over next 10 to 15 years? So my answer to this is, see, if you have to ask whether you should do direct stocks, that simply means that as of now you are not doing or you do not possess that expertise, at least so far. Real estate, you cannot invest in chunks of one. Many of your SIPs are 1,000, 2,000 rupees, Mr. Prasanjit. With that kind of amount, I do not think you will be able to invest into any reasonable real estate asset. So what you are left with till your corpus builds to a certain level, or till you develop expertise to invest in your preferred mid-cap sector in direct stocks, I would suggest that you choose the path of mutual fund. That is probably the best of both worlds. Why? One is because mutual fund is managed by professional fund manager. As of now, you are not able to make up your mind where to invest. Leave that decision on the mutual fund manager. Number one. Number two, your horizon of 10 to 15 years is long enough so that you can choose equity-oriented investments in mutual funds. Within your preferred mid-cap sector, you can choose to look at mid-cap mutual funds also. Within mid-cap space, you can consider a couple of schemes, Motilal Oswal mid-cap fund or HDFC mid-cap fund. Last but not the least, mutual fund is also a tax efficient vehicle. Long-term capital gain tax is only 10%. I think this is much better compared to real estate or other investment avenues where you cannot invest in a small chunks as well as you cannot redeem in small chunks. Your entire real estate investment, one fine day when you need money, you'll have to liquidate the entire chunk. You cannot sell one room out of a 2-room or a 3-room flat. So I hope that answers your question.
All right, all the best, Prasanjit. We move on. I have Lakshmi online with me. Lakshmi, hi, good evening.
Hi, good evening.
Hi. Thank you so much for sending us your question. What I can see is you've invested in Mira Asset, NYSE Fang Plus ETF Fund of Fund in 2021, and you are in profits right now, is it?
Yeah.
Okay. So what was the whole idea or intention for investing in this fund?
Diversification to the US markets,
Okay.
and I was hoping
Sure.
that would be a good one. May
Sure.
I just share my concern?
Sure. Please go ahead.
Thank you. Firstly, thank you for taking my query. And recently, not recently, about a couple of months ago, there was a talk about recession in the US. Where, but in the recent past, I have seen news items that recession is not happening, thankfully, because I've invested in Miri, of course. So I just wanted a brief about this fund, that I should hold on, that I should book profit.
Sure.
I'm
Sure.
a senior citizen,
Sure.
by the way, and I
Okay.
have the ability to wait.
Okay. That's lovely that you read up so much and you are concerned about the performance of your fund, and also because you're in profits, you would obviously concerned about the money that you're making on it. And you being a senior citizen, in spite of that, you're invested in equities. Hats off to that. I hope a lot of investors of your age, learned that from you. But having said that,
Thank you.
no recession, but then chances of slowdown, that's still lingering on the international market. But having said that, for the purpose of diversification, international diversification, and specifically the US market is a fantastic choice that you have. But if you have a longer time horizon, will it be comfortable for you to stick to this fund if you have, because 2021, I can see you've invested, right? So do you really need this money? Or are you, just because of the fear of recession or slowdown, you want to be out of this fund?
Second one is true. Whether I should not just completely exit the fund, probably book
Sure.
my profits, so at least to the extent of reclaiming my costs.
All right. Interesting question. And Amol, although I'm sure a lot of other investors who've diversified their portfolio in the international market, and especially in the US market, might have the same kind of question in their mind. But let's look at it this way, okay? It's good to have diversification in the portfolio as far as international markets is concerned, but also one needs to time it very right, okay? But the kind of concern that Lakshmi has is very right. She also wants to cover the cost, and also she's earning profit, so might as well just make use of it. But having said that, we always advise to have a financial plan or investment as per a goal. You need to be slightly disciplined when you have this kind of a financial plan in your hand. Yes, there are concerns about the US market, but at the same time, if you have a slightly longer time horizon, maybe 5 to 7 years, won't you just mitigate all your risk by that time?
Right. So this is absolutely valid point, Kavita, and I will try to answer based on this as well. I also want to add one very valuable piece of information that Lakshmi has given to us. She said that she invested in this specific scheme for international or geographical diversification. So now that itself tells us that she has an existing portfolio which is comprising not just of this scheme, but probably multiple schemes and probably of a bigger size, since she used the word diversification. Now, when we say diversification, the entire idea of diversification is investing into several asset classes that are not closely correlated. So when I assume that largest part of your portfolio would probably into Indian fixed income and Indian equities. And diversification you can get by investing into international equities or probably precious metals like gold. Diversification will work only when those assets remain a part of your portfolio, because you never know. 10 years 2 years back, for the previous 10 years, Nasdaq was the best performing index or best performing investment. It grew about 1250% in that period of time. So this is something, market is something that you cannot predict, and newspapers probably are not the best indicators, because few weeks back you read that there is a recession. Now recently you read that recession has been so this is not how it operates. I would say if you want to actually enjoy the fruits of your diversification, remain invested. Now, where I'm going to suggest you about profit booking is, instead of calling it profit booking, please do the rebalancing. Now, what do I mean by that? If you have chosen that your Indian equities are 60%, and if your Indian debt component is 30%, and 10% is your international diversification, because of market going up, if that 10% has, suppose, for example, has ballooned, if that component has gone up to 15%, then rebalance that 5% and invest it back into Indian equities or debt. Rebalancing is much better way of doing it rather than calling it profit booking, because you will probably not like it. After you do the profit booking, that particular fund or that particular FANG ETF goes up by another 10 or 20%. So I would say follow your portfolio approach, which Kavita also mentioned just now, and do the periodic rebalancing. Annual rebalancing is probably the best way to go, because you will be saved from most typical funds have 1 year of exit load. I'm not talking about this fund, but a broader portfolio approach. And many a times equity, you have advantage of long-term capital gain tax instead of short-term, which is 15%, and LTCG is 10%. So considering these advantages, annual rebalancing is probably the best thing that you can do for your portfolio.
All right, the time is up, and Lakshmi, I hope that you've understood whatever Amol tried explaining you. And with that, thank you so much, Amol, for being on the show and helping our viewers with their financial portfolios today. And it's a wrap on the Money Show with that, but we request you to send us your financial portfolio queries on our WhatsApp number. That's an email ID. Also, YouTube. You can send us your queries on YouTube also. Write down your question on the comment box, and we'll include your questions on the show and do your live financial planning. Thank you so much for watching. Goodbye.